You know, every single trader has a day that just tests their limits, pushes all the wrong buttons. But what really separates the pros from everyone else is what you do after the loss. So today we're going to dissect a pretty painful trading day, not to dwell on the red, but to forge some hard-won lessons in strategy, emotion, and most importantly, the power of rules. Okay, let's get into it.
This right here, this single piece of advice from a mentor named Oliver, it just cuts right to the heart of the whole story. This is the main event, that dangerous, emotional pull to get it all back, fighting against the cold, hard discipline of a trading plan.
And look, this isn't just about one trader. This is the battle every single person in the market faces every single day. Are you actually executing a strategy you've worked on, or are you just playing what our trader here calls the guessing game? Well, on this particular day, the guessing game won, and boy, was it costly.
So let's break this thing down, trade by painful trade. We're going to do a play-by-play of this losing streak and see exactly where things went completely off the rails.
All right, so the day kicks off with Walmart. The trader spots what he thinks is a totally valid bull 180 reversal. Now that's just a pattern where a stock's been tanking and suddenly looks like it's about to make a sharp turn and head back up. So he jumps in, thinking he's about to catch a nice profitable move.
And here we go. Mistake number one. This is where the discipline just crumbled. See, the setup looked pretty good on the super fast 2-minute chart, but his own rulebook, it's crystal clear. The specific kind of bull 180, he calls it a 3-finger spread, it absolutely has to be confirmed on the 5-minute chart. That's the rule. But he didn't wait. He just acted on impulse.
The emotional hit from that mistake was instant. Later on, his mentor, Oliver, actually called it the dumbest trade of the day. And you could just hear it in the trader's words. That criticism stung. It wasn't just losing money, it was a real psychological blow.
So next up, he's feeling the pressure from that Walmart loss, right? And what does he do? He jumps right into another trade, this time on Uber. His big idea? He thinks he sees a dead cat bounce. That's basically when a stock that's been in free fall has a tiny temporary pop before it continues to drop. So he goes short, betting it's about to fall off a cliff again. Now here's the crazy part. Our trader actually has a system, a tool, designed to prevent exactly these kinds of mistakes. It's called the NPR checklist. It's simple. Before you trade, you ask, N, can I name the setup? P, is it in the right position on the chart? And R, is the risk acceptable? It's a quality control filter, plain and simple.
And here's the proof that things were just broken. When he looked back at that Uber trade, using his own NPR system, it only passed 2 of the 3 checks. The position was all wrong. I mean, his own system was basically screaming at him, do not take this trade. But he did it anyway, and it led him to say later, maybe I'm an idiot. You can feel the frustration, right? Knowing the rules and just breaking him anyway.
The last trade of the day, it actually starts with a little glimmer of hope. He gets into a trade on Chevron, CVX, and it starts working. It's a small winning scalp, and for just a second, it probably felt like, okay, I can turn this day around. I can claw some of this back.
But that small win? Ugh, that was just bait. It triggered the most dangerous mindset in all of trading. That little voice that says, okay, let's go bigger. Let's get it all back. He broke his rules again, piled into a losing position, and bam, stopped out. Full max loss for the day. The guessing game was officially over, and it was a complete disaster.
Okay, so this is the turning point. After the account is bleeding and the losses are piled up, the trader gets some, let's call it tough love, and a lot of clarity from his mentor, Oliver. This is where the real lesson actually starts.
And the advice was so simple, it was almost brutal. It wasn't some magic new strategy, it was just, you should be trading like the rules, not like your emotions, not trying to get your money back. You trade according to your predefined plan. That's it.
So what would trading like the rules have actually looked like on that very same day? Well, let's take a look at the A-plus opportunities the market was just handing out while our trader was busy chasing his own tail.
This is the real cost of emotional trading, isn't it? It's not just the money you lose. It's the incredible opportunities you miss because your head is just clouded with frustration and that need to get back to even. The market was serving up winners, but he wasn't in any state to see them.
I mean, just look at this potential trade on Intel. It was perfect. A textbook, A-plus setup. You had this huge elephant bar. That's a massive green candle that basically screams the big institutions are buying everything they can. It was confirmed on multiple time frames. and it bounced right off the 200 moving average, which is a huge support level. In his own words, this was a setup you could ride that thing all day. This is what he missed.
So look, a painful day like this is absolutely worthless if it doesn't lead to change. So how did he turn this absolute defeat into a concrete, actionable rule to make sure it never ever happened again?
Well, when he really thought about it, what was the root of the problem? It all came down to one number: 4. 4 times he ignored his plan. 4 times he let his emotions drive the bus. 4 bad trades. 4 shots that he took based on hope instead of a solid plan. And each one just dug the hole a little bit deeper.
And that number, 4, it became the foundation for a brand new, super important risk management principle. He calls it the 4-shot rule.
And here's the new rule, straight from him. He decided to cut his maximum loss on any single trade to just 1/4 of his total daily limit. The logic is so simple but so powerful, right? Instead of blowing up his entire day on 1 or 2 bad emotional decisions, this forces him to have at least 4 chances, 4 high-quality shots to find a winner. It's a system built to enforce patience and guarantee that he survives to trade another day.
And that brings us right to the end, with the most important question for anyone who clicks a mouse in the markets. When you really look at your own process, are you methodically executing a plan you've worked on, or are you just showing up and taking shots, hoping you can get it all back? Because the answer to that question could be the difference between a tough lesson and a completely blown account.